Good evening, all. Ira Epstein of Linn and Associates with your SPDR ETF wrap-up for this Monday evening. And we are now on August 23rd, 2021, about 6:10 p.m. is when I'm recording this. I didn't see this coming. I wish I could have told you that, hey, Friday, buy everything in sight because the boards are going to go all green. Now, I'm sure there are traders that did. I didn't see that coming. And I would say it again, I didn't see that coming. We had an idea yesterday, and I wrote it in my nightly report for my futures trader, that that the Pfizer vaccine for COVID would be approved either today or tomorrow. That was on the news all weekend. It's not inside information. It was. The market liked that. It liked that it gave cover to corporations, be it United Airlines, Boeing. The city of Chicago announcing today that this week they expect to say that if you're an employee of the city, any type of employee, you have to have a vaccine. Obviously, there'll be some caveats for medical reasons, could be religion, but just saying you don't want to get it won't work. And if you don't want it, you probably won't have a job. And you're going to see that spread across the country. We saw this coming weeks ago, 2 weeks ago, when I told you the people down south would be ostracized and that you don't want to get it. You can't go to a gym. You're not going to be able to get in the restaurants. People are going to ask for cards, vaccine proof. It's all coming. This is just the tip of the iceberg. It's all coming because that's what society wants. That now there'll be the holdouts, and you'll never get everybody done. That's what science says, and that's reality. You're going to get a certain group of people that don't want to get the shot. They'll probably get COVID. The odds favor that. And when they get it, whatever version, Delta or whatever it is, they'll get antibodies. If they live through it, that's a good sign. At least their body will have built something. If this keeps going year after year, which is very possible, this is a virus. This isn't a bacteria, my friends. This is a whole different game. If this keeps going, that population, unfortunately, either builds antibodies or we say goodbye to a lot of those people. I don't want to say goodbye to anybody, but it's the reality of what's going on, and everybody to a degree has a right, but those that don't want to be vaccinated don't have the right to be around those that are, and establishments that want you to be vaccinated if you want to visit them. At the end, they're private businesses. If governments say this is what you do to a school, otherwise your kid can't go, that'll be it. And you're seeing this going on around the country. Then we're looking at the economic data that's coming out. The housing numbers were great today. They were nothing less than great. Let's look at it that way. The Chicago Regional Index came out this morning, and that was very strong. Europe's numbers are very good. Seems to have all meshed. I didn't see it coming, but it seems to have all meshed. ARC, you can see how ARC has just bounced away. You've left a gap on the chart. That'll be interesting. We'll see if it can fill this. There was a gap right here if you look on a chart. Charts like to fill gaps. So the low that day was 119.91. And the high was 119.30 the prior day. Let's just see. The low 119.91. Then 119.30. So you have a 60-cent gap in there. You came back today, and I'm just pointing this out, and you got to 119.61. So you still have this island possible. If it were to gap away and not fill it, you'd have an island bottom. Traders would say that if you didn't come down to fill it. I'm giving you the what-ifs. If you think I don't know my chart patterns, I do know my chart patterns. But you often fill gaps, and that's where a game begins. With the swing line, we get a better edge. The market today, this is how you looked on Friday. You have been coming down with a pattern of lower highs, lower lows. To break the pattern, you had to get over 117.99. You did it today. Effectively, this wave to the downside has come to an end, at least as far as the swing line is concerned. But there's more there. When we look at moving averages, you came down, you fought. The 100-day fell back, and you've gotten over it. Where do you think the next resistance is? I would say the 18-day average. The market's not in an uptrend. It's out of a downtrend. You have a lower low, higher high. The bias is down. When you put on the chart the Bollinger Bands, What are the odds of staying outside of a Bollinger Band? 5% of the time. You had 2 days in a row, then you fought to get back in, and you finally bottomed out against it. I can tell you that one of the things that's right in the center of what I teach in charting is you never buy a Bollinger Band and you never sell a Bollinger Band. You can come out of Bollinger Bands, out of longs, and you can come out of shorts. How you do it, I teach in the Enhanced Bollinger Band course. We then look at momentum. When you're looking at this market, you have momentum to the downside, and we said it's very oversold. Now, I haven't for a good part of August put out any weekly updates. My design, I've decided to take some time for myself, have a longer weekend, because to do this, I've got to break up my days. And I still am putting out, though, over the weekend, my paid subscriber weekend video, where I'm covering 40 charts at a time. I've cut nothing out of my paid subscribers. They get it rain or shine unless something is wrong with me. Well, on that, I've been pointing out, you're oversold. Be careful here. You might bounce. You're getting your bounce. Okay. I think looking at this chart, oversold. Market's been milked for what it could. Into a resistance area, it's got to rebuild itself. That would be my charting interpretation. Apple, still either side of the 18-day average up to resistance at the upper Bollinger Band, hasn't been able to piece anything together to jump on. You have a higher high, lower low, and flat momentum. PAVE. It's difficult to want to be short PAVE as you've got now Congress has come back. I'm talking the House of Representatives. They have all had to come back. Ms. Pelosi called them all in for the 23rd. They are hoping to get right back on their vacation by the end of the week if agreement can be found where they, number one, pass the Senate bill that passed for the infrastructure. Who knows if that'll happen? The budget has to be dealt with. Otherwise, we're going to run out of money. And, of course, the reconstruction bill that is the centerpiece of President Biden's campaign, what he wants to get done, $3.5 trillion, and how do you tie it all together? You got moderates on one side, progressives. How does Ms. Pelosi keep it together and give the president what he wants? And the president's done fabulous damage to himself with Afghanistan. If you go anywhere in the heartland as these people went home, I am sure they heard, how can you have this blunder? And that's what they're hearing. So when that goes in there, I don't know how much weight the president carries right now. He did himself tremendous damage right when he needed the prestige of I'm going with the president. I'm not saying the bills won't pass. Just telling you where they're at. I'm not a politician. But here's what you have. You have bias up, trend down. You keep fighting at the 18-day average, and momentum is flattened out. And you're going into a big vote on this. In XLI, and by the way, even if it passes, you do know that the infrastructure is going to take years to complete. They're not going to pass this and tomorrow morning we're breaking ground and doing things. This is going to be over time. They have to decide what pays for it, outside of the Senate bill. When you get to that big bill, that's where the battleground is. In the industrial sector, you got to the upper band, you got to the lower band, and you went back to neutral. I just said I don't understand how to trade some of these markets. I guess I'm a novice. The XSD, the market was in a bear trend, going home on Thursday. On Friday, you ended the trend. Why? If you look at this pattern, lower highs, lower lows, you had objectives here. Market was already oversold, and if you take out the high of Wednesday, you break the trend. The market on Friday did that, and today you're up there. It's all a question of reading the trends and knowing when to come out of a market, and everybody will tell you that, same as me. You don't have to be the first guy in or out. You got to pay attention to the chart. How many days do you think you're going to stay under that lower Bollinger Band? And that's what you've been doing. So if you look at this band, you finished at 985 on Friday, so you were back over it. But the day before was 1 day under it. On this day, you closed on it. 2 days, 3 days. You're on borrowed time to move to the right-hand side. Now, when you reopen, if you lose the embedded reading, a lot of traders are going to say, that's a trade bottom. Could happen. There's certainly no edge in selling that market down. At least that's what I'd be telling people, is it's trying to pick itself up. When a market closes at the high, or right by the high of a day in a fairly decent range, and you had a range today of 30 cents, and in this stock, that's a fairly decent range. It's normal. If the market opens steady to higher, you will lose that embedded reading because it has a reading at 1976. Just explaining how it works. ESGU, you've gone from the upper band to the lower band, back to the upper band, and I call that the psychiatry trade. Why? Because I know I have my phone number to my psychiatrist, and I used to, believe me, I'm not being funny, you'd want to call somebody and say, what is going on? Why am I not seeing that? Why is it going that way? And your day's miserable. But when you learn how to work with Bollinger Bands, it changes your day. And you're looking at this and you're going, why am I hanging around there anymore? You're not embedded, you're right there. I have a way of teaching it in the Enhanced Bollinger Band course. In XLE, lower highs, lower lows. What do I tell you almost every time that this occurs? The combination of a Bollinger Band in 200-day or the combination of a Bollinger Band in a 100-day is pretty stiff. Can you get through it for a short while? Well, you went through it like it didn't exist. And now you come back up and suddenly that's where you're at. That's the point. There's a point where you're being piggish in a market. You've got to understand those terms. The bear side is not what most of you trade. Most of you trade the long side, the buy side of a market, and I get it. The theory's the same. Don't have to have the last penny out of a market. In emerging market, you basically went from the upper band to the lower, back to the 18-day average. You're not oversold. I would be surprised if the pros aren't still selling at 80.27, but they'll have a tight stop. At 80.54, I think they would call it a day. If they get short up there, they'll probably look at that 100-day average. Do you really want to be trading for 60, 70 cents? Probably not. In the gold market, surprise, surprise, surprise. The market, remember, it opens after futures. Futures were roaring in the market. That's why you have this big gap. This is based on the futures, not on this. I hope you get that. Higher lows, higher highs, massive resistance beginning, and I call it massive. 169.19 to 169.90. Clear that, you're going to get me pretty impressed with the action. On pullbacks, I can understand if the pros and you are buying at 166.91, but you can't afford to let it get under, as I see it, 166.16, because then you don't have anything. You got a higher high and then a lower low. Second thing, keep your eye. Don't let this market get overbought when you start your buying program, if that's what you're doing. And I know so many people like to own those markets. In the gold miners, today was a bounce. It did not change the pattern. You're still with an embedded reading. You close near the day's high, but you're 4 points away from losing the reading. You got to close over 21, so 4 would give you 20.06. You got to keep going. I think the pros were selling this market today. We'll see if I'm right or wrong on that. If they lose a 21 reading here at the end of the day, I think they'll be out. TLT, still in a buy mode. Higher lows, higher highs, but look at how overbought it is. There are many systems. I use my own technique, and I look at that. When I see overbought, I walk away. Walk away means I'm not telling my subscribers to my paid research to buy. I see the trend is up, and I'm telling them now, time to take money off the table. There is another set of numbers up here called window envelopes, and I show them in the morning to my paid subscribers. You want to learn how to work with those because markets don't always hit Bollinger Bands. FXE, is the market getting ready to give a pop in it? Well, you lost the reading in the sense that you're over 20, but you have to close over 21 tomorrow to say the reading is lost. This was enough warning for me to say maybe you walk away from the market temporarily, but even if you didn't, you get a reading over 21, out you go. So I'd be paying good attention to whatever that's going to do tomorrow. You put it all together, you want to get a game plan, and that's what I try to do. Each morning I open up my charts 8, At 9 o'clock, typically, I start recording. Why? There's so many government reports that come out between 8 and 9. I want them to get baked into the market. I want the market to also get that rush of money that's coming into it to work with it. On Saturdays, I deal with the longer term charts. I know for a lot of you, this day charts, they're too much action. Not the weeklies. The weeklies take a longer time and they'll set with these rules and you work with them as best as you can. And you don't have to take crazy risks on them. If the risk is too big, you walk away from the trade. What else do you look at? We're going to look at the news. So by the time I start recording, I've got all the news that I want from around the world. Asia, typically all the U.S. major reports that I've been looking at. By 9, they're out. I'm covering all these markets and more. You know, I've added Amazon. I've got Apple that we're covering at this point. I added SOXX in my paid subscribers. So I want the Philly semiconductor index in there because I think that semiconductor play is going to be an interesting play very shortly. So I look at all this, put it all together, try to give you a game plan that you can work with in it. And that's the key. $8.95 for 30 days. Now, you're going to get 6 videos a week. 24 videos a month typically. If there's a holiday in there, you'll miss one. But typically it's 24, each about 15 to 20 minutes long, all about charting. So if you're looking for me to go through fundamentals, this is not for you. If you're looking for somebody that's a chartist, looking at both short-term and long-term, and I don't just look at a weekly chart on weekends, during the days, I'll bring them up if I see something, because I'm looking at them all day long. I mean, I've got 4 computer screens here. I've got plenty to look at. So I look at that, see what's going on, and we take it from there. To find out more, go to our website. You can call my staff, but it's under the word research for the video and under education for the enhanced Bollinger Band course. I'm Ira Epstein. You have a good day.